to trade or not to trade? That's always the question when we have a day that looks like this, right? Very, very overextended, especially when we trade New York. And this is something that we're going to be discussing this week on the topic video for the educational part. I want to give you guys some tips on when to stay out of the market. And today, I'm going to be 100% honest, I thought that it was one of those days. It's funny how you can see like how many pips these trades are. 20 pips on GU is very, very small. And the risk reward is like pretty good. This one is wrong. This one was like 9-ish. I think it was around 1.7 and 1.9. So it was pretty decent. And it's just funny how we can see the kind of the pick count and the risk reward is two different things. A lot of traders say, it took like 100 pips move, but for us, if the risk reward is shit, it doesn't matter, right? So let's discuss on what I saw in the market and how I reacted. And to be completely honest, I wasn't expecting anything from the market today because when I woke up, I saw that. I was very, very tired this morning, and I did see this this kind of false breakout structure with those kind of seemingly equal lows, and I was like, oh, okay, so let me just put an alert here. So I'll put an alert here just because I thought I already missed the move, right? And then price started playing, and I started doing my analysis because I was doing something else, and then I started doing my analysis, and I started looking to the left and giving myself a little bit more guidance on what's happening. And when we check and this is my problem. When I wake up in the morning, I'm usually very, very tired. So most likely I will skip the analysis if I don't see a trade immediately, because some of those trades I take are really instinct. I don't do like my due diligence before. And then I realize if I hit the stop loss or if I hit a B or if I don't have a trade, I go back and like, okay, I wanted to say like, I'm going to take my coffee and then everything's all right. But usually I take a good glass of water and I start doing my analysis. If you check at structural expectation, I'm going to repeat myself because I think it's not very clear. Structural expectation is a compass. It gives you an idea on how the day starts, where we were and where we're heading and how the day will end, right? So most likely, if you see this first break, right, price creating this first break, you have only two possibilities. If you, example, the price is here. Price will either start doing this and switching the trend or creating a false break, right? And people would say, yeah, but that's pretty stupid. That's like a Forex is buy or sell. So basically you're just guessing. I'm not guessing. So basically two things can happen. I will react based on either one of them. In this case, price reacted and went very swiftly and very quickly higher. We're talking about a matter of like 2 to 3 hours, okay? And then this is where it gets interesting. If you see this false break, you can see those equal highs. And these are not really just equal highs. As you can see, even if we had like kind of an inducement here, it became liquidity when it enticed it lower, and these candles closed below. So these are very, very good equal highs. And remember how we can identify an SMT. It's either from an enticement with a false break of structure, in this case, false break of structure, and also with when it has clear liquidity, in this case, equal highs. And right now what we see is we have both. So it's even better. So price just goes into the SMT, provides a reaction. Now it's adding a little bit more weight. Like, oh, okay, that's a little bit better, right? We have that structural expectation on one side. We have that higher time frame, seemingly FBOS. We have equal highs. We have SMT. We're starting to build a story, right? And this is very important when it comes to trading. We need to have a story. And now, if you check on the intraday, we had buy-side liquidity being built at Asia and boosted low, most likely an SMT here, right? Did we have a reaction? Yes, but remember, we still have all this crap to take here. Not relevant, but I mean, why would price just reverse from there? It's possible, right? It's possible. And this is why waiting for a relevant break of structure in these cases, it's important, right? As you can see, we have this SMT. Oops, SMT. We have an inducement high. We're taking this liquidity that has been engineered based on the reaction. Then you have your inducement PY. Nothing stops this inducement PY. A lot of people would see this as a break, and they would sell from this point. But remember, this is risky. You want to wait until the mitigation of that extreme happens, and then you take the decisional zone, right? The decisional zone, this, what I'm talking about is the first trade of the day. And I'm kind of guessing this would be the first trade of the day, or you would trade the Asia, right? Because we're in the middle of London. That would be the first trade of the day. And as you can see, usually when price makes a new low without mitigating this point, it's kind of a little bit risky. And you should try to switch your analysis behind that this has induced by the FBOS. That's the SMT, and this has led to this new high. So most likely this could become now the decisional PY, okay? And price just continues higher, right? So very careful. We always want to come from a mitigation and not actually trade from it, okay? So you want to take the follow up. Another kind of an order flow entry that I don't appreciate here, but the speed and momentum in it is nice. Price pushes. Really, really simple PA. What I like is that when we have a reaction from this PY here, see, it's always the same thing. Price goes goes in, speed and momentum. When there's speed and momentum, here there's no speed and momentum, here there's speed and momentum, boom, you lock in. You're ready. You put your alerts, okay? So now we could have a second false break. Why? Because now it's coming from this SMT. This is more than obvious. This is like super, super clear. Even a blind person could see it. And to be honest, I wasn't really convinced on the buys because I really thought I had missed them. And this is something that happens often, is price induces these equal lows on the lower time frame. So not super relevant, but still nice. It makes a reaction, right? This is the FR. And we have our entry. I was like, okay, we're done. We're done. So I've put my alert here. And then price started doing something because this alert has already been triggered. Price started doing something and it came back with speed and momentum to fill the remaining imbalance. And this is where I said, it's actually worth the risk, because that would be the extreme. This would be the decisional, but this also is the inducement POI zone. Remember when I say, and people are sleeping on this, please do not sleep on this, wait for that mitigation of that extreme. Exactly what I said here. If this could have come back in here and then do this, this is better, right? Wait for the mitigation of that extreme. It comes back. This makes a new high. This becomes the relevant break of structure, right? And it comes back with speed and momentum. Remember, the speed and momentum in a POI is only valid when we don't have liquidity on the opposite direction. So let's say you would trade from an SMT, right? And price, let's say you don't have this FBOSS. This here, this is the SMT, right? Price pushes lower, right? There's no liquidity here, right? So this is less, let's say risky. The example, if price would have like something like this, like if there's structure that are closer, it's normal that price can be attracted to these zones. And if this would not have the decisional and this would be completely the extreme, I don't think that this would have been a trade that I would take, okay? This has been taken on the M1. Very, very simple. I waited until price goes very deep into it. And again, I took the trade from the way up, right? This was the body candle closure I just bought from here. It was a 44, 46, sorry. Was it a 44? No, I think it was a 44. I need to check. And I just pressed buy, right? And I established my stop loss based on the push, right? Optimizing the stop loss. The proper stop loss location is the decisional zone. So that's very, very nice. The best way would be to put this one, but it's completely confirmed to just put your stop loss here based on that decisional zone. This was just too easy, okay? These are the type of trades that when I'm in, I'm so confident on the analysis. It's just so freaking clear that sometimes I just don't take partials. These are things that happen when you have that gut feeling, this instinct. I just don't take partials because I'm like, listen, my first trade of the day, it's very, very well confirmed. What's the worst thing that can happen, right? And then price started coming back, and I must admit that I was kind of a little bit pissed that price starting to correcting directly after my push. And I think that is kind of normal because basically they're just remitigating their orders, in my opinion, because this, you need to understand that when price is overextending like this and price is choking, and this is important what I'm about to say, when price is choking is because they probably don't have enough volume to continue higher, right? Missing some volume, or they're actually trying to close their orders that they pushed, right? That they opened here. Remember, they sell, 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 sell. Maybe they come back and they start closing their position. And this way, this is why the price action seems kind of like not so sure of where it's heading, but it's still highly confirmed. And it was so confirmed that when price came back into this zone, okay, I actually took another buy because it came back and refilled this mitigation here. And I waited, and I took it again. And I didn't even sweat when this happened because I was just, these are the type of trades that you're just so confident, you just let it play, let it breathe, let it do its thing. And I closed this one at break even. I put this one at break even. I didn't close it, but I didn't even take partials. I took like 90% of my partials around here, I think. And I felt confident. And what's the worst thing that can happen? This trade goes to stop loss, and this one hits me break even. And what I do sometimes is I put the stop loss, the break even, into the stop loss of that second position. So what's the worst thing that can happen? I maybe lose only 75% of this 100% stop loss, right? And these are the kind of trade that just play so well because the structural expectation is in line with your trade. The higher time frame kind of sentiment is in line also. You're not trying to take a reversal trade. You're trading in line with recent engineer liquidity, this SMT, these equal highs. You have the speed and the momentum, right? Speed and momentum, the relevant break of structure, the M5 imbalance fill. There's a lot of things here that actually confirms. The only thing that is unfortunate with this trade is that it happened very, very early. I don't trade around these times so often. I'm going to be completely transparent. That was very, very early in the day, and it fulfilled perfectly because I wasn't like targeting the moon, even though there's nothing, right? The target was very probable, just a couple of pips higher, and it was very, very simple. And then in a matter of minutes, it just started exploding, and that's it, right? So when it comes down to properly identifying a liquidity and relevant one, most likely you will get a reaction. But remember, right? If you identify the liquidity, the only relevant liquidity from the only relevant liquidity from the buy side would be this one, because I understand that we have some here, but that would be like a super optimistic TP, and it would go against the structural expectation. Remember, when you take shorts like this, like what's about to play, your TP is always have to be probable, but you will have to close partials before. At this mitigation of this decisional, doesn't matter. You trade, you don't know if it's a fulfilling trade, maybe it's just a pullback. And see how price just actually perfectly reacts to these equal highs liquidity, and it's just so easy to see how, look, we have this point here being mitigated, right? The decisional is being mitigated, right? Perfectly. And that's it, right? The extreme, sorry. And now, if you didn't trade the extreme, you need to wait until the price mitigates the decisional. That would be most likely this zone right here, with this internal break. And look what happens. Price, if I remember, goes perfectly into it. Perfectly into it. It's not even perfect. Like, it fills an imbalance. I know a lot of you guys have been sleeping on imbalance, but it's true. And what we're doing is we're targeting the relevant liquidity and the more probable TP. It's insane how we see those candles in M5. It looks like the PA looks like we're in M15, but it's because we're so much in a small zone of the overall day, and my complete analysis has been done on the M1 almost. And as you can see, this is now liquidated, and this is also the most relevant liquidity of the day, and see how price just trades away from it, right? Multiple members took this buy also, and you start realizing that these plays, even though they're like just a couple of pips, the fulfillment is so easy, because the biggest mistake people would do is they would take shorts here, okay, at the extreme. It's going to be completely okay, right? They would not take partials at this decisional zone, and they would let them their trade hit B. Afterwards, some people would enter here, and they would target this. I'm seeing you guys do this. Like, this goes against everything that we discuss always, and this is probably my fault again, that some of you guys are interested in high risk reward trades, but there's a moment and a time when you need to take high risk reward trades. Take the damn TP. Like, here on a funded account, let's say that you would have taken, let's say, a 200k FTMO, okay? That would have been two of your trades, okay? So let's say that you would trade, I don't know, what is a good lot size for 200k? 20 lot? So 20 lot is 200 pips, $200 per pip times 22, all right? This is $4,400 TP. And this one is 3760, right? This trading view is driving me nuts. This is like insane money, but I think a lot of people want to just pass the challenge. Or even if you cut this in half, it's still 2,200 and like half of this shit here. So if you trade with 10 lots, and 10 lot is not a lot, right? If you would lose this trade with 10 lot, it would be $340, right? $340 is, it's not even 0.25. So think about it. Like, when it comes down to higher capital, there's a you don't need like to trade with higher lot size. You just need more capital, because this would refine entries. You're set for life. And this is what I'm saying. Like, when it comes down to trading in line with liquidity, with the day, the structural expectation. I know I'm annoying, and I know I have been putting a lot of emphasis on structural expectation, and I didn't even use it before the shelter. I almost created this thing while I was teaching you guys how to trade, because I realized how so much lack of understanding of the market's heartbeat a lot of you guys have. Like, some people still struggle with structure, and I think that it comes down to the lack of foundations. My first mentor who taught me trading was very, very strict on the theory. He literally wanted me to read economic events and news even before going to the charts, because you have to have a fundamental analysis prior to the technical one. He was trading purely like, I think, 70% fundamental and like 30% technical, and it created me a lot of emphasis in understanding the higher legs, like the pushes. Like, some of these guys, and even me back in the day, we used to hold trades for like 5 to 6 weeks. So when it comes down to intraday, you need to understand that the structural expectation is in play. We're not trading it. We just accept what it's doing, and we just take the wave. Remember, here we've seen price makes this new low. We have no evidence until this thing is taken if they will go higher or lower, right? So when price starting doing this and this, And then with speed and momentum doing this, it's normal to want to take a short here because you're seeing intraday liquidity. But what's not okay is that you're predicting that potentially, and it's okay to take a risk. It's completely okay. You're kind of like putting a risk on the fact that we're most likely doing this high here and this will make a new low. And it's completely okay. But how to stay out of these traps is with the mitigation. Like here, wait for it. It looks less impressive, I must admit. Before I used to trade those extreme like a sniper. But I realized that even though I was profitable, I was putting a strain on my psychology. I was putting so much stress. Do you think I stress when I enter these trades? These two trades have been a breeze. Zero drawdown. 0, 0, 0. I didn't even saw red when I entered those positions because it went too fast. When I enter, I'm going in red. It's normal. But then in seconds, you're in blue and just push, 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 push. These trades have been like 31 minutes. It's easy. So, and this is a topic I would want to talk about this week is when it's time to take a trade and when it's not time. And this here, I'll give a lot of tips on how to not get involved into these trades. And of course, in some cases, price will not mitigate the extreme. It will just continue its route and you will miss the trade. But missing a trade that doesn't have an entry isn't really missing a trade, right? Let's be completely honest here. So try to always trade in line with the liquidity, structural expectation, and give yourself a story before. This trade, if it wasn't to like taking my coffee, even though I don't take coffee, if I didn't took the time to create that story, that false reaction here, everything in between, and I didn't look like so far, I just look at previous day and just gave me a little glance and a little idea, and that's it. And I actually saw that yesterday, like when I was at the gym, I literally saw price like here at Asia, like I was like this. I saw this, okay, at Asia, and I was like, these equal highs and this FBOSS. And it's funny because when I woke up in the morning, I didn't even remember that I saw that. So it's pretty funny, but that's how I am when I wake up. I'm really, really tired. And I'm like, it would be so fucking easy to just trade swing trading. You would just buy from here, put a stop loss here, and that's it, right? And you just go to sleep. But that's a 1 to 2. So if I would be like a high time frame trader, I would be probably not making as much money, but my win rate would be so easy because I would have so much time to just enter, right? So it's always funny when you see this, and this is often the way I trade on my smaller account, my house money. I just take trades stupidly, and I don't put any stop losses, and I just let the thing play. And this is something you could also try to do. But look at this thing. A lot of people took the buy here. Some took the buy here. I didn't confirm if people took shorts here, but if you look at the overall day, it's a beauty. And what even makes me more happy is that you guys are taking these trades without even consulting me. So this means what I teach work, and this cannot be more satisfying than anything in the world. I could exchange $1 million and I would still not feel the same way. How could you win $1 million? Sorry, and I wouldn't feel the same way. Because people can criticize you online. They can tell you all kinds of bullshit. Oh, you don't have this and this. If you show something that works, people cannot critique it. It's impossible because it works. And it's not like, it works in bar replay. I've tested it. It works. I went in hindsight and it works those setups. But if you're not able to take them, it doesn't make any sense. The fact that people are able to take these trades is just completely out of the mind. Like I'm just so happy. So I hope you guys are really enjoying the journey. We're just getting started. We're targeting at least 80% success rate in the community. I want everybody to make money by end of 2025. I really need everybody to do the due diligence on the chart, start the tree demo, FTMO challenges, and buy yourself a challenge. Invest in yourself. Take a 10K, then grow it to a 50K, then grow it to 100K, then grow into 200K. If you pass 3 demo trials, FTMO, and you're not able to pass one, then it's a psychology issue. It's not a technical issue. Just try to take this slowly and respect the copier setting that I showed you. And there's no chances of you failing. It's just impossible. And then it's just scaling. And I'm going to be completely honest, when it comes down to scaling, this is the fun part. Because then it's just numbers. And when you realize the amount of money you can lose in trading, and when you turn the tables around and you can see how much money you can win, this is where you realize that you don't need any business. I do because I'm an entrepreneur and I would kill myself just to trade. But I mean, for an introvert or for someone that doesn't want to work, that just wants to trade and travel and have fun, trading is literally the best business and scalable business in the world. You can make millions of dollars. You don't have to have no offices. You don't have to pay for a shop. You don't have to pay for an equipment other than internet and a computer and fund your account. You have no employees. And you work for like 2-3 hours a day. Think about it. It's just a dream job, literally. And I think this is why a lot of people are attracted to trading. It's just a dream job, but dream job equals a lot of effort, right? So let's continue to work. I hope you guys enjoyed this little trade breakdown. Nothing too fancy. I feel that the more videos I do like this, the more I repeat myself. But I think it's important to understand the thought process behind. And the more I teach you guys these, the better you will become and the more trade you will take. And it's nice to take those on a $100 account. But now it's time to really take things seriously and take it to a funded account and grow this bad boy. I hope you guys enjoyed it. If there's anything, you let me know. And I catch you all in Discord. Peace.